Hello and welcome to the Los Angeles Westside update for June 2007. First, I'd like to apologize for making this so late, but I've been quite busy with sales and it's been difficult for me to get back to you guys. I want to let you know a couple things that are going on in the marketplace. First and foremost, I have a new lease listing at 3733 Avenida del Sol. You may check that out online at that web address as well. It's a wonderful 5-bedroom, 4.5 bath, over 4,000 square feet home in Studio City Hills, right near Sherman Oaks and Beverly Hills Post Office. It's a fantastic house, guys. You'll love it. Fantastic hardwood floors, wonderful kitchen. Take a look at it when you have a chance. And if you know anyone who's interested in leasing that property, please let me know. Let's get straight to it. This month, in the sales side of things, we've seen the sales price pretty much hold very well. Single-family homes are averaging right now around $899. What is the median sales price for Westside Los Angeles? And the condo prices are still hanging in there at $590. It's pretty much a flat line across the board, which is definitely a good thing. It's showing some stabilization in the marketplace. There has been an increase in inventory. We are seeing that, along with the days on market actually has shrunk some. It's gone down to 50 days on market for a single family residence, and that is 76 days for income properties. Income properties are taking longer to sell, and there are more and more of them expiring at this time and being withdrawn from market. We're seeing about anywhere from 150 to 200 withdrawals and expireds on the market every single month right now. And that's still maintaining consistency. People are not willing to sell it for less, or they can't sell it, or it's been on market for a long time. There's a lot of things happening, but the inventory I'm watching seems to either be withdrawn and then reappear on the market, or expire and reappear on the market. So it still is out there to be looked at. Target GRMs for investment property right now. If you're looking at a 3 to a 4 unit building, if you get something in the 15.5 to the, I'm going to say 17 range, that's a good deal. It means you're going to come in with about a quarter of it in equity, and you're going to hold about 75% of it on loan. And that will in turn should get you pretty close to break even, if not at that. And that is what the market is bearing. When I see a 14 or a 15 GRM, it usually sells within 5 days. If this is something that you're interested, please give me a call or email me, and I'll guide you through the process a little bit faster and get you educated on what's going on with that. As far as larger apartment buildings are concerned, generally look for somewhere between, I would say, a 13 to a 15 GRM. If you see that kind of a GRM, that's definitely a good buy. Pick it up while you can. You're still going to look at about 30 to 40% down, but because that's what the banks will allow on a mortgage. And that is pretty much the marketplace as we have it right now. The rental rates are still creeping up ever so slightly. We've seen some stabilization in the single-family, in the 1 bedrooms. The 2 bedrooms are still creeping up. I think they're around $2,600 if my memory serves me correctly. And the 3 to 4s are still rising ever gently. A lot of that is due to lack of availability. There are not enough units, and the landlords are still able to get their asking prices for the rents that they want. There's not much option out there. Trust me, I've been out there looking at it, and it's not a pretty sight. But this is what creates the value for the commercial buildings. Let's move on to the news. What's going on with the dollar? The dollar has been weakening some and is now starting to stabilize. Why is this happening? Comparatively to the EU, the weakened dollar means that countries like Germany will export fewer goods to the U.S. This actually hurts the EU, and it hurts some of the other economies around the world. And what this will do is it will eventually cause a shift, and will cause, eventually, with a slowdown in the economy, we'll see potentially a rate reduction. And when we see that rate reduction, we'll probably see a lot of the mortgages bounce back as well. Bonds and treasuries seem to be trading okay right now. And as far as the marketplace overall for the housing market, we haven't really seen that slam dunk with foreclosures and REOs. Why is this? The banks are actually holding back some of their inventory. They're hanging on to their inventory and bleeding it into the marketplace ever so slowly so as not to crash the values. This is why one of the reasons why we're seeing valuations hold. Everyone is wondering what the hell is going on with the housing market, as possibly, I mean, the subprime market is definitely having an effect. How is it affecting the single-family home personal residence buyers? It's not. They're just requiring a little bit more down. And with that, it means that more qualified buyers are coming to the table and buying the properties. For the people who are unable to buy the properties, you're merely going to have to save up some money and sit on the sidelines for a little while longer. It is still not impossible to buy a home in Los Angeles, and that is evident of the activity that we're seeing. It's still really a great market. It's a good market to get out there and hammer out some deals. As far as investment properties are concerned, 3 to 4 unit buildings in particular have been targeted by the subprime market. There is no longer any allowance for interest-only loans on 3 to 4 unit buildings that are non-owner occupied at this time. This is definitely hurting that marketplace, as a lot of the valuations that they are valuing the buildings on right now for a break-even cash flow is based on those interest-only loans. So who's buying? People who are cash-intensive heavy. Those people are buying, and they're going in and they're cleaning up some deals because they can afford to put the 20% down in order to make it break even. You can still get a regular amortized mortgage on 3 to 4 unit buildings, and you can still do a option ARM program on a 3 to 4 unit building as well. The only thing with the option ARM is you're looking at a little bit more of an interest rate. So that's pretty much the marketplace in the news, is what's happening. We're still waiting to see what's going on with the subprime market. We're all watching it. Mortgage-backed securities are down. Is still shaking out, and we're going to watch it shake out through the remainder of the year. That being said, there are still opportunities out there, and people are still buying them regularly and heavily. So there is activity in the marketplace. As a matter of fact, I have 2 in escrow right now, so I can tell you there are people out there buying. As far as the book of the month, let's talk about that. Start Late and Finish Rich by David Bach. This was a good read. It's a quick read for those who want just some real no-fail plan to just kind of get through their finances and figure out how to create some financial wealth quickly. This is a no-holds-barred, honest look at your finances and how you operate and function and where the opportunities are and how to do it. It's a great book, guys. It recommends everything from real estate to securities to financial planners. It's worth a read. It's a quick read, and it's definitely worthwhile. I think I gave it an A- on the newsletter. As far as everything else is concerned, if you know of anyone who is looking for real estate right now currently, or anyone who is looking to sell real estate right now currently, I always appreciate your referrals, highly, and I will take really good care of your clients. Any referrals are welcome. You can simply contact me or call me at 310-623-1350. And I look forward to serving you guys as best I can, and have a great day. Okay? Bye.